Following the Silicon Valley bank collapse, the price of gold soaring as nervous investors are searching for safety. Is this a move that's built to last? Let's bring in the Chartmaster, Carter Worth.
Well, I think it is, but what we can discuss, of course, is the concept of ratio work. We know that people spend a lot of time in looking at large cap versus small cap stocks, value versus growth, the yield curve itself, 2s versus 10s. What we're going to look at now is the relationship between gold and stocks. So this is a ratio chart. It's gold's relative performance to all stocks, the Russell 3000 index representing 98% of the U.S. investable market. Now, there are no lines there. Let's put some on. So what do we know? If you look at this iteration, that is a well-defined trend line. And where does it start? It starts at the moment the S&P peaked, 4 January of a year ago. Now, put some arrows in just to annotate how precise that line is. It is literally bounced where? To the penny, over and over. Now let's put in the downtrend line. And what you'll see here, that spike in gold in the ratio is the COVID low, right? The ratio, stocks plunge and the ratio chart spikes. And so we have these converging trend lines. And today we broke out through the upside of that downtrend line, out of that wedge. You can draw the lines this way. It's the same chart again. You can call it a cup and handle. Final chart, put in the trend line. Doesn't matter what you call it. It has all the elements of an important bottom.
Carter, we noticed that Bitcoin also took off today. What did the charts say about that?
Yeah, I think there's a bit more upside. I might have a few here, but think about this. Bitcoin is obviously gold on any given day moves 24 basis points in the last 2-3 years. S&P 50 basis points. Bitcoin's average daily move is about 170. And big day today, I think you can, 28,000 or thereabouts, maybe a little bit more. Downtrend line's clear. You can see it there. We moved above it. We checked back to it, and we ricocheted. So a little bit more, but not a lot more.
All right, Carter, thank you. Carter Braxton Worth of Worth Charting. Grasso, what do you think of gold?
I think you can't picture a better environment for gold where everything seems to be crumbling around. You would think that people would rush into gold. I don't know if there's a real buyer for gold. I don't know who's buying gold right now. I don't think anybody watching the show. I think there's a certain amount of people that would be buyers of gold, and that number has shrunk over the years. But I'll just address the GLD versus the miners. If you think gold's going up, then the miners usually have a bigger move. It's usually a 3-to-1 move. That's where you get the beta out of gold, both up and down.
The G, as Tim reminded us during the break, in lags is actually for gold. So you'll
note I remind when the setup's pretty good. So you won't hear from me when the dollar's up 20% and gold is down. But it's a dollar trade too. So to me, if what the Fed has done is stepped in here and pretty much signaled, and if Fed funds are right, you're buying gold, because this is an environment where we're stagflationary at best. The dollar, which has certainly been a lot of pressure on gold over the last year and a half during those periods. But as gold started to rally, it was all with the peak of the dollar back in October. A break of 2,000 gets you through 10-year levels on gold, and I think you can go a lot higher.